Fed Chairman Ben Bernanke spoke at the Kansas City Fed's annual conference in just the last hour. So let's go straight to Jackson Hole, Wyoming, where Bloomberg's Kathleen Hayes is standing by with a special guest. Kathleen.
Thank you so much. Ken Rogoff, Harvard University professor, joins us. And in fact, Ken is one of the presenters at the Kansas City Fed's 33rd annual symposium, which kicked off this morning with a speech from Fed Chairman Ben Bernanke. And of course, the topic is financial stability and macroeconomic policy. Ken, welcome.
Thank you.
So let's take this step by step. Let's start with the Fed Chairman's speech. As a reporter taking a look at it, I said, whoa. Not a lot of new stuff, a masterful exposition on the financial crisis and how the Fed responded. But the market seized on, it seemed like a little more optimism maybe. Yes, the economy is really starting to turn. Is that a fair assessment from those few lines he had in the speech?
I don't know that it was really aimed at focusing on that. I mean, here the Fed chairman speaking to the leading central bankers of the world in what is traditionally one of the most thoughtful environments. And so he's trying to give a balanced account of what he thought happened, how it happened, laying a framework for discussion, not just for what to do now, but where should regulation go.
Well, one thing you have done over the years is watch the global economy very closely. You know, you've been charged with that in more than one job. What is your view then, not just of the U.S. emerging from recession, but the global economy?
Oh, I think there's no question the global economy is healing and emerging from recession. And I think where we can argue is what's going to happen next. Is it a V-shaped recovery or is it something slower? I think in Europe and the United States, we're going to see a more gradual recovery.
What about China?
Well, you know, China's recovery has been strong, but I think a lot of it's predicated on eventually exporting to the U.S. There's lots of infrastructure investment, funding firms. Okay, domestic consumption's growing, but it's not going to fill in. It's not going to provide demand for all this infrastructure, all these new buildings they're building. So I think at the end of the day, if the U.S. consumer doesn't come back, if Europe doesn't fill in, if emerging markets don't, China still has a lot of adjustment ahead.
So there's a lot of big ifs, and these ifs, I guess, get us back to the exit strategy, which the Fed still seems very far from. I mean, there are little movements in that direction, but no big, here it is. Do you agree that it's too early?
It's definitely too early. I mean, the economy is too fragile. The last thing on earth they want to do is let people slip back into recession. They're backstopping the whole financial system. They'd like to let go very, very gently, and they'd rather err on the side of waiting too long. I don't think there's any doubt about it.
Are you concerned about the dollar? I mean, there's so many things hitting the dollar. You know, how the pace of U.S. Economic recovery, ironically, if it's stronger, hurts the dollar because then people feel more comfortable about taking on somewhat riskier investments like stocks. Joe Stiglitz, Nobel Prize-winning economist, talking about how we're in a world where there's going to be a gradual shift away from the dollar as the reserve currency. And he seems to be talking kind of about the dollar's vulnerabilities. What do you think?
Well, I don't know that this is a short-term vulnerability. I do think emerging market currencies are going to continue to strengthen against the dollar. That's going to be a big theme going forward. And maybe a few currencies like the Swedish kroner, which behaves like Asian currency these days. But I think by and large, the dollar's going to, depend on where we go in the financial crisis. If it gets worse, the dollar may strengthen again.
If it gets worse, is there a chance the financial crisis gets worse from here?
You know, I think at this point we've converted the catastrophe, the panic, into a slow burn. Everybody basically believes the government's backstopping everything. So at the end of the day, when is there going to be concerns about the U.S.? That's the real problem. The fiscal policy, the profligacy, the changes we have. But that's not going to happen overnight.
Okay. In terms of where we go next on financial reform, again, I was just talking to Glenn Hubbard about Ricardo Caballero's paper talking about sort of backstopping the financial system, the banks, with insurance contracts. What do you think is the next step? With healthcare reform front and center in Washington, financial reform doesn't seem like such a hot topic. Should it be? And what should be the number one thing we do?
Well, where we need to be is to have less leverage in the system, especially less short-term borrowing. I don't know any good economic theory that justifies why we need to have the financial firms borrow so much on the bond market, be so highly leveraged as they are, and they need to rein that in. But on the other hand, if they move too quickly, they're nervous that it could hurt the recovery. They don't want to do anything. So I'm inclined to believe, although there's recognition that leverage is a problem, they will not, in fact, rein it in too quickly.
And how much of that is politics, that when at the end of the day, that the financial lobby is a big one in Washington, you spend a lot of time inside the Beltway, and that we're going to hear a lot of talk and noise, but very quietly not much done to really, rein in a rich, powerful constituency that makes a lot of donations to both sides of the aisle?
Well, that's a huge issue. You stated it well. But I think layered on top of that, they're nervous about the recovery. They don't want to do anything too fast. So they'd like financial regulation some distant future date.
Okay, well, that will give us a lot more to talk about in the future. So, Ken Rogoff, thank you so much for joining us.
Thank you.
So from Jackson Hole back to New York, but we'll be back in Jackson Hole with more guests later on today. Back to you.
And we'll look forward to those interviews. Kathleen, thanks very much.